Good morning, everyone. If you can hear me, I would appreciate if you can type in a chat. The sound is good. My name is Josip Kosik. Today is quadruple witching Friday, September. If you can confirm the status, that would be really great. Good morning, Mark. Good morning, everyone. As you can see over here on the slide, we are not financial advisors, and we are going to start by looking at what the current market situation is. And then after that, we are going to review one of the trades that I placed before. And then at the end, we're gonna set up the new trade. So one more time, this is my agenda. Look at the current market environment. After looking at the current market environment, we're going to review the trade that I placed. I'm going to provide you with this link. In fact, what I'm going to do, I'm going to just open up that hyperlink and show you that this is a CBOE website that gives you the settlement values. So I'll put that in the chat box. And when I put it in the chat box, then everybody can have that for a future reference. Let me just do this right now, and then I can make sure that you all have that. Hi, Jose. Hi, Joe. It's good to see you all. So, as I mentioned, we're not financial advisors. I like to usually start with the big picture. And because we have gone through quite a bit of move this week, I'm going to revisit the monthly just for a brief few moments. And again, I like to look at first Dow Jones. In my opinion, that's called Grandpa because it's been around the most in terms of the historical data. And what you're looking right here is the blue line that marks the March 26th of 2020 low. That's that COVID bounce, and then rip to the upside. And then the beginning of the year, we did go up higher in January, and in February we came down, and over here was the February 24th. And somehow that line is so significant because every single time when we come to it, including this month, as you can see over here, we did again come to that February 24th to the penny. And then what happened? We collapsed, and it was the same thing that it happened again in March when we came to it, and it's just continuously it's acting as a resistance, not only on the Dow Jones, but on all the majors. It's interesting over here. If I would just extend it, you would see we came right to it. It's just this. This is more than coincidence. This level should be engraved in your mind. That's the February 24th. That's pretty much when, as you know, incident happened in Russia, in Ukraine, and it's holding the truth on all the charts here. So we're obviously bearish on a big picture. We're unable to pass that February 24th for one single month, with exception, as you can see here, and let me just change the color here to yellow, on a Dow Jones. And that's why I like to look at the Dow Jones, because Dow Jones, I know it's only 30 stocks. They're the blue chips, they're the leaders. But if the Dow Jones would be first one to rip to the upside, most likely, so if this is a grandpa, then a son, meaning the S&P 500, would also follow it to the upside. And then you have a child, meaning the Russell 2000, the newest of these major indices, would follow as well. And of course, I kind of don't want to talk too much about QQQ because that's really not a sector. That's more like a technology. That's not like a market. That's more like a sector. It's a technology, and it contains these big tech names such as Apple, Amazon, Nvidia, Netflix, Facebook, to change the name to Meta and everything. So knowing this kind of information, I want to now proceed to show you In case you want to get in touch with me, you can always look at here, trading with the UFOs. The last trade that I placed was on September 6th, and it was at the money, where we were trading at a particular level that was at 39.40. So I said at that point, this is simply a line in the sand. And if you open up that link that I just sent it to you, in that link you would be able to see what exactly has happened with that trade. That trade has closed below the 39.40 for that particular day, and it has earned the maximum profit. So today, I would like to, after reviewing this, and obviously there was no need for a management because that trade worked out on both sides, on at the money call side that has expired worthless, and at the money their put side that was in the money. I look at the new trades, but I want to disclose the steps. There are 3 steps that I'm going to use. It's all about the location, just like that trade that I placed the last week, which was at the money. At the money, I want to first visit the chart of the SPY, and I want to work on a SPY using the option value map for October. And then I'm going to move to the selection of the strikes. And then I'm going to decide what size I'm going to take. So, one more time, unlike what I did on a previous session when I traded that same day expiry, I will not do that today because it's a third Friday of the month, and on top of it, it's a quadruple witching because it's a quarterly. So you have options expiring, you have a futures on option expires, you have a commodity expiring, you have everything expiring. And today is known as a day when market makers are really in charge, and they can move the market in uh, any direction they want. In fact, I can just bring the Finviz here for a second just to show you how volatile the market is as of this morning. So this is showing the Dow Jones Industrial Average that has gapped down almost 300 points. It has rallied up, and then over the last 20 minutes, it started coming down pretty fast. So it fooled the people thinking that it's going to be theta gap, meaning rally up to the dotted line, which is a previous day close, which would be Thursday. And then what do? We fill the halfway, and now we're coming down. The S&P is a little bit more realistic because the S&P over here, as you can see, I'm going to just use the one tool to mark this, has not crossed the open. So if the S&P crosses the open today at 38.80, that would be a chance that maybe that gap would get filled. But as of now, it's everyone's call because really we don't have a certainty whether or not this small little uptrend that we have on these 10-minute bars is going to hold, or going into the weekend that we might slam right back down. So the best way to look at this trade is pretty much just to kind of plan the trade, not for today, but for the October expiry. So having said that, I want to tell you why I'm picking the October expiry. I'm right now on the Forex Factory. I'll actually copy this link also and put it in the chat so you can click on it. You might have to adjust few values on it, which is here under this little green filter. When you click on it, by default setting, all the currencies are on. Now, of course, if you're trading the US market, you can click none and just check US dollar. I usually don't uncheck any of the events because events that I care about is the central bank, which means our Feds, and that would be the red flag event. If you hover over this red, that would be the high impact, and if you hover over the white, that would be non-impact. So be aware of it. I usually don't look at this low impact and a non-economic impact. So I leave the marks on these two, and then when I click apply the filter, I rather than being on a one single day, see over here, it's a one single day. I like to click the arrow here so it shows me entire week. So we have nothing major going on Monday, nothing major going on Tuesday, but we have something major going on Wednesday, and that would be Federal Open Market Committee that it's dealing with the federal fund rates. And right now they're currently on 2.5, and everybody's forecasting, as you can see over here, that the rates are going to be increased by the 75%. So when you open this up under this little box, there's a line here that I find that it's very, very useful. And it says, why would traders care? Because it is most important factor for a currency evaluation. And over here, as you can see, it has been at 2.5, and there's a high chance they're going to increase. Now, the question becomes how the market is going to react. So I will take a moment and ask you to type in the chat box, how do you think the market is going to react on this news? Is it going to go up or is it going to go down? I'm going to just take a sip of water and wait for your answers. Is the market going to go up or is the market go down based on that particular piece of information? That's what I would like to know. So I'm going to just select here time frame for a SPY, which is a daily, to get a little bit better view of what is going on. And as I mentioned to you, for setting up the new trade, right? I want to look at the location. I want to look at the location. And once when I look at the location, I'm going to build a trade around these strike prices. And then I'm going to, of course, move to the size. What size we're going to do it. And then, of course, the last step is going to be the execution. Now, again, due to the fact that we have an expiry today, I cannot use a September option. So next available choice would be, of course, October option. So I'm using on an SPY October options. And what I'm doing right here is looking up the levels. And what I mean by the levels is that I have a very clear level over here that has a strike price 396 of this red unfilled order. So what number would be higher than that? Well, obviously, the number that would be higher than that would be 400 level. So on the top, I'm going to be picking the 400 level if I want to do some kind of trade, right? So I don't want to now talk about it whether this is my $400 target or if this is my $400 some kind of a bear call spread. I don't want to do that. Okay, the answers start coming up, like so it says the bad news. Effect is piling up negative on the top of the negative, therefore the market will go down. Joe, I completely agree with you. Mark says it's going to be sideways if they raise the rates to 70%, but if it's less, then it's going to go up. Mark, I kind of heard the news that there's even possibility of them raising the whole point. If that's the case, that they raise the whole point, then that's that unexpected. And most of the time, the stock market doesn't like anything unexpected. And in that case, market just moves, as Joe said, down. So I would kind of plan the trade. Let me just tell you what my plan trade is. Okay, this new trade that I'm planning would be actually a bear put. And specifically to be way out of the money bear put. And I'm going to look at the downsides for the bear put. But it will be financed by, and I'm going to put here a number of bear calls. And I'm saying number of bear calls because what it could be that if I go back over here to the chart and I decide, and let me just click here and use a tool here, that I'm selling the $400 call That is basically, if you're looking at the current price, 38, uh, 30, 38, $383.80. That's about $17 higher than the current price. There's not that much premium in that $400 call. So if I wanna one more time finance, if I wanna finance my bear put, which is my real engine, this would be my commanding spread. I would need to finance it, but I'm financing with this out of the money bear call spread that I would need to do several of these at least in order to pay for this. So let's say if my bear put happens to be about the buck 50 and my bear call gives me only about the 50 cents. So over here, bear put $1.50 of the debit, bear call 50 cents. I would need to have maybe three of the bear calls, and that's why I said here the size matters, right? To finance my bear put. So again, we know the location on the top. If the location on top is the 400 and the chart supports it, and I really mean it, the chart supports it because we have this huge on the daily red UFOs, then I'm quite aware of it. And I'm gonna look at here just for a second here on the volatility. When the gray line is above the blue line, that means that the puts are more expensive than the calls. And here I'm planning to use, and again I'm gonna just type in, what I have in mind. I'm having in mind selling here $400 call, which are in comparison to the puts way more cheaper. So I would need to probably sell more of these calls to finance buying of the puts. And this is what my logic is. So I want to hit the bear put, but I don't want to pay for it. I want my bear call to pay for it because as of now, if you're looking at the daily here, let me just hit the escape button here so I clean up this chart so you would see it. We're like in the no man's land. We're in between this green UFO and below this red UFO, but we are closer. We are closer to the red UFO. That means there is a possibility, or somebody can make an argument. Well, the trend is still, and let me use a green one here just to kind of point out to you what some people are looking. The trend is still up, and then they randomly correct the two dots, and based on these two dots, they make an argument that that's a bullish environment. Well, one of the reasons that I started with this whole bigger picture is that I don't get anybody looking at the smaller daily time frame and convincing me or converting me that I need to believe them that the trend is up because somehow, for whatever reason, between these small areas, I can draw the line, and this line is gonna appear as if we are still in an uptrend, as if you're still in an uptrend randomly. Oh, look, here we have three touches, therefore the next move must be where? Up. Well, I can also change a color and connect all these things and ask you over the larger period of time, which means entire year, because this is 2021 ending. This would be the January. This would be the 9 months of data. What direction is market heading? Down. Never mind that for the last 4 months there was an attempt to go higher. But when we came to this level, and again, everybody knows the date when Russia invaded Ukraine, February 24th, is acting like a magnet. Multiple times it's coming to that level and it's bouncing off, on, off, on. This is a major crossroad. So having said that, I just want to make sure that nobody is now thinking that we need to place the bullish trade just because the Feds are going to increase the interest rate. No, that's not what we are doing. What we are actually doing right now, considering the bearish bet, aiming at this lower target. So if everybody is agreeing with me that 400 is a good level to place the bear call spread, I'm willing to start looking at the location, not on the top, but down uh, at green unfilled orders. Okay? At the green unfilled orders. And that would be my target. That would be my target for what? For a bear put. So I don't want to rush this. I'm taking the time to explain this one trade because I really believe that this trade is going to work, and we're taking the longer term options. We're taking the October options in order to place this trade, and we're going to also use the option volume map in a moment here, but I just want to make sure that everybody follows the logic. So now that I have selected above, well, I need to go on a daily. I shouldn't be skewed here. I need to go on a daily. Okay, above 39.60 would be 400. But I would like to have an option volume map back this up. But let's not go there till we are done discussing the location of our trade, because the entries do matter. So we know the top, we need to now look at it. Where is this going? So where this thing is going is down here to this level of the, let's say now 3700. Okay, and I'm saying 3700 as a target because that would be just slightly above this 369.38. So I would have that as my target. Now, of course, I would prefer if this peers to it, but knowing that that would be the good, this is basically what I'm aiming. And again, I'm going to just spell it out here. I'm going to just spell it out here for all of you to kind of understand the logic and see if this makes sense. I'm going to just spell it out here and have you guys kind of comprehend that this new trade is looking at 397, but I picked a higher call, which is a 400. And of course, for a bear call, I would need to have something higher. So I might pick the $4 higher or $5 higher. But for a puts, my target is 370. And I'm going to do it with the puts, and I'm going to do the bear put spread. Now, this is as much as I can squeeze out of location. Now we need to move into the strikes, and this is where the beauty of this platform Trade Active comes in. Rather than me pulling up the option chain and magnifying all the small numbers, I can ask the platform to spit out the data that I need. And how do we know that? Well, single right click, go where it says add a study, and you will notice there's two studies that are proprietary. And of course, the one that we already use is this automated unfilled order. There's another one that is patented, and that's the option value map. And in my opinion, this is probably one of the less utilized tools by our current users. So how do we insert that? Well, first of all, we just go here and we highlight it. Once when we highlight it, this pops up and it says, we're going to look at the contract volume. Well, that would actually tell me activity on each volume, but because I'm not placing this today, I want to have an open interest. I want to have an open interest because open interest is going to tell me even what's going on in October. And I'm selecting the 3 expiries. So all that I need to do right now, I click apply. And then when I click apply, I want to make sure that you guys are aware of it, that the first batch is completely irrelevant to me. And I say irrelevant because that option expiry is a history. it really it doesn't concern me. It doesn't concern me. The one that I care about is actually open interest for the October. And as you can see over here, we have a data that is quite significant, and we are seeing the way greater activity, 220 thousands of put activity being traded versus only 54. So what do I want to do next? I want to double click on this and show you that I can look at the different strike price and work my way through this whole thing. So one more time, how did I get there? Well, first, I'm going to remove the study, and I'm going to do this one more time from the beginning. I'm going to add this particular study, which is the option value map. Okay. It says the strikes above and below. The default setting is 3. I don't want 3. I want at least 20, because if I'm building this spread that involves the 400 and 370, and the current price of the SPY is approximately at 383 or 384, I need to have at least 17 single increment strike prices higher, and on the downside I need to have a 13 strike prices lower. So therefore the 3 up and down, it's not going to do the trick. So I need to ask, as I said, for at least 20, because in case 20, it includes my 17, and in case of 20 being shown, it includes my 13, and then I might discover something interesting. And I'm going to leave it on a contract volume, because I squeeze out of the option interest what I wanted to squeeze. And option open interest was showing to me that there's more activity on the puts for the October on the downside versus on the call side. Therefore, that again confirms my whole idea of the bias being where? Down. So I'm going to just bringing again the Forex factor in, show you on Wednesday, there's a high expectations that they're going to raise the interest rate from the current 2.5 to this 70 to 75% higher, and at the same time market is struggling to go higher. So my bet is accurate, and as of now, accurate. At any given time anything can happen, and I need to disclaim that. But I'm going to apply this, and I'm going to look at the open interest, and again I want to now focus on the October. And I'm going to enlarge this, and I'm going to be looking at activity over here in this area that would be above 400. And I'm seeing a tiny little bit of activity right here at the 400. Tiny little bit of activity. But I also want to see what is happening with this activity down here, which is below this green unfilled order. And activity right now is just showing the volume. It's showing the volume. But if I go up again and start double clicking on this, it's going to change to the open interest. And when it changes to the open interest, this pink represents the puts. Now notice, as I'm hovering over the puts, 400, I hope everybody sees that this pink area of the puts, it's way greater than the green one for the call. And what is it originally that I want to build? Originally I said I want to sell the 400 call and buy something higher. Okay, so let me now create what I usually like to create here, so I don't confuse anybody here what I'm doing. So I have 3 columns here. So this would be the debit trade, these would be the strike prices, and these would be the credit trades here. Okay. Now, I'm going to spell out what I have in mind. So if I'm aiming to have the bear put spread here, I can just borrow this bear put spread out of the money. So I'm doing the bear put spread out of the money, and over here I'm doing the bear call spread also out of the money. I will need to buy here. Actually, I'm going to spell it out. Buy to open something here. I don't know, maybe 404 or question mark, maybe even something higher. But I'm definitely selling to open here $400 call. The question is, how many of these units do I need to pick in order to finance my debit? My debit. So the way how I want to look at this is, I know that I picked the right level 400. I even know that it's picked for today's expiry, but today is too late to go in because that premium is probably pathetic, completely pathetic. But I'm beginning with the end in mind, right? I know the bear call needs to be financing me. I know the size needs to be probably greater than just one spread. But now that I know that, let's now examine the green. Okay, there it is. There's my baby. Coincidentally, what's the strike price? Let me just make a circle around it so everybody sees. Strike price is a 370 for a September. And do you see here any of the green activity at the 370? No, it's only buying of the puts at the 370. Well, I also see buying of the puts at what? 375. And in fact, if I hover over it, I just changed my mind. I'm going to use the 370 as my target, but I'm going to purchase 375. So now that I know this information, and basically the chart is speaking to me, I'm not coming up with anything. The chart is speaking to me. So I'm going to be buying to open 375 put. I'm selling to open even more out of the money, 370 put. Now be aware of it. This is a $5 spread. This $5 spread that I have is going to most likely cost me less than $2. So if I'm assuming here, this is assumption that the debit is $2. Okay? Over here, if I'm getting credit of the 50 cents, I would need to hit it by 4 contracts to get that $2. Now that's tricky. That's the reason why I'm saying that's tricky, because be aware of it that this spread is $400. Okay, 404 and a 400. It's $400. If I throw in 4 contracts of this particular spread, I'm investing 1,600. My goal is to keep this as low as possible in terms of the outlay of the capital. I want this trade to be free. I want this trade to be free, right? Now, if this is a $2 of the debit, okay? If this is a $2 of the debit, let's now discuss this. What's my maximum profit here? Well, it's very simple math. You take a $5 spread, because the 375 minus 370, it's $5. You subtract the $2 from it, and you ended up with the maximum profit of basically $3. Any questions about what I'm planning to do? Because now it's going to accelerate. Now, really, I mean, I'm done theorizing. I'm completely done theorizing, because I said first pick the location, then use the option value map and also volume to see if you're the only one at that level, or if there are other institutions trading at that level, and then figure out size. So I'm going to give you a few seconds to process this. And again, this particular lesson is probably a lesson that begs few watchings. And that's why it's being recorded, and that's why in your leisure over the weekend you can watch it, and then if you feel comfortable, feel free to execute this in a paper trading account like I will at the very end. But I do want to back up everything that I'm showing here with nothing else but the facts. There's no room for opinion. There's no room for opinion. And let's prove this, okay? So what I'm doing right now, I'm clicking on a chain, and coincidentally, I have right away October chain here. So all that I'm going to do now, instead of the long call, I'm going to go on a bearish, and I'm going to put the bearish put, and now I'm going to be editing the spread. And now when I'm editing the spread, I want to make sure that you guys are aware of it. I already know the strike prices. There was a bigger activity at 375. Because there's a bigger activity at the 375, I'm going to pick the 375 put as my purchase put. But I want a price to go down to 370. So when the price goes down to the 370, I can click OK, and it's going to calculate the value. And this is beautiful. It's only $1.55. This is really shaping up the way how I was saying. It's pretty much shaping the way how I was saying this. So let me just make sure that this thing that I have snapped in, it's where it should be. Where it should be. So I have snapped this in, saying to you that it needs to be around a $2 debit. Everybody remembers when I said that? Well, guess what? It's even better. It's a 155. So if I'm laying out the 155, what's my profit? Well, please don't now start doing the math in your head. You have this powerful platform. All that you need to do is copy this area right here, and then you're good with it. So then you're good with it. So then you don't need to do the math. You don't need to pull up the calculator. I mean, we live in the 21st century. Let the computer do the hard work for us. The most that I can make, it's a 346. Isn't that better than the $3? Right? So if I get filled at the $1.55, okay, so now that we know that this is going to be the $1.55, right? I might not need 4 of these contracts. I might need only what? 3 of these contracts. Okay. Now it's going to get complicated even more. So just hold on. I'm going to compare the spread, and I'm going to copy the primary spread. Okay. When I'm copying the primary spread, I'm going to change the primary spread into a bear call spread. When I change it into bear call spread, I'm going to alter the strike prices. And the reason why I'm altering the strike price is because I'm selling the 400. I'm selling the 400. Let me find the price. And then I'm buying the 404. I'm buying the 404. Yeah, they have a 404. They even have a 405. Well, let's play with the 404, because I remember I typed in 404. And now when I click on it, ooh, this is rich in premium. Did you notice that? It's $1.27. Wow, that's even better. That's even better than what I expected, which is good, which is good. I'm actually wondering right now, let me just play the devil advocate. If I have here 405, and it's giving me, so this 400 and 404 is giving me, I think, $1.26. Let me just dump it in here and look at it. $1.28. Could it be that if I would just move this to, let's say, 400 and selling the 405, that's gonna give me maybe $1.50? Well, in that case, if it gives me $1.50, oh, that would be beautiful, because then I just need maybe only one contract. Only one contract. So rather than me complicating all these things back and forth, why don't I just alter this? So I'm going back now to edit the spread. I'm changing the 404 into a higher strike price. And of course, I need to revisit the open interest in all these pieces of information in a moment. And now when I click, this number right here is supposed to change to buck 50. So your eyes should be focused right here on this number the moment I click OK. What happened here? 156. Oh, this is beauty. This is beauty. You know what? In this case, we don't even have a third point, which is a size. We don't even have a third point, which is a size. This is exactly what I anticipated. So you know what? I'm scratching this 404. I'm picking up the 405. 405 call with 405. I'm getting rid of this one. I don't need that. So take a look. 156 to pay for 155. We even have a dollar profits. You know, this kind of sounds to me too good to be true. But you know what? Without any hesitation, let's see, where's my Thinkorswim platform? I need to log in. Just give me a second here. It's not going to take that long to log in and to fire this trade in and see if this thing works. And as I'm speaking, guess what the market is doing? Going up or going down? Here it is, ladies and gentlemen. It is just about ready to take out the lows of the day. But be aware of it. It's option expiry. It's option expiry, and if it's option expiry, market makers can manipulate that market at any given time, up or down. So I'm glad we're not trading today anything. Well, unless you're trading the bearish bets, But even if you're trading the bearish bets, I would not be surprised if they manipulate this. This is not completely sea of red. You still have some sparks of green right here, Procter and Gambler, like in the consumer sector. But this could turn. This could turn. Oh, see, as I said that, guess what happened? The green bar. If this green bar now starts negating everything, then this is changing. Because this is 20 minutes delayed. Just be aware of it. This 20 minutes delay. Okay, so my Thinkorswim platform is just about ready to go in. So when I type it in, I reset the values to something that majority attendees should be able to relate to. So I reset the value in a paper trading account to one account being 10,000 and to one account being at 5,000. So we don't use too much of the money. Over here, you see net liquid value 5,000, and on this one, I have reset it to 10,000. Right. So SPY is currently trading at still 383, so $17 higher on regular October option, and their color, different color, is right here. I need to give more strike prices. So what do we give? 20, if I'm not mistaken. Yeah, 20. So there it is. So well, it's it's stopping right here at 398 because they have a. Okay, let's add maybe 24. That should bring it there. Okay, you know what? Let's also add the volume in open interest and have this at the 28 so I can see all the numbers. Come on, give me 28. Okay, open interest, only 58 contract. And you know why I was picking the 404? Because the option value map was showing the 3-digit number here for a 404. For a 404. But what matters more that the option value map was showing to me for a 400 more. But anyway, because I already built the trade as a 400 and 405, and on the downside I have a $5 spread, I will stick with this. So I'm clicking here where it says a bid, sell, vertical, and of course I would need to adjust it because they gave me whatever they want to give me here, and I'm going to go to 4 or 5. It says $1.46. You see, I knew it that calculation that we got when I have pulled that information that my bear put spread is going to be at the 155. I thought, no, wait a second, at 156. It's unrealistic. I mean, I can jack it up. I can ask 156, but I honestly I doubt that they're gonna give me at that level. Anyway, if I want to fire this trade at the same time, because obviously now when I click over here, math is going to be the same. You're risking $345 out of the $500 spread because you're getting the credit of the 155 if they give me 155, right? If they give me 155. But what I was about to do here is I was about to go down here on the put side, pick the 375, which by the way, hint, hint, hint. I mean, I don't know if this is poking your eyes or it's just poking my eyes, and I might be the only one. 280, and for 370, you see, I don't even have any other choices because over here, what did they do with the strike prices? So take a look. Dollar strike price, then they skip the 383. Then they have a $2 strike price. They don't have a 379. They don't have a 377. Then they give you 376, they give you 375, and the next one is what? 317. Mark, you already got the 155. You know what? Let's not hesitate. Let's not hesitate. So what I'm doing here, I'm actually buying this spread. I'm buying this spread on the vertical. You see, this is a 156. I'm gonna put this thing down, and I'm gonna go up there and try to get this one at 4 or 5. He said 4 or 5. It says a debit. Yeah, I don't want a debit. I don't want a debit. I want a flat. I actually want a 1 penny credit. That's what I want. So take a look. This is the bottom line, and this is what I'm going to explain to you once when I tuck this away. That really, in this case, my maximum loss is a 500, and my maximum profit is a 500. It's not that different than that at the money trade that I talked the last time when I was with you. But the question is, am I going to get filled? Well, I better hurry up. So I send it in, and I usually wait for 2 full minutes. So my buying power has dropped from a 10,000 in amount to $499, right? I'm waiting here to see if I'm going to get filled. And when I'm really confident in my trade, I actually leave the original trade on and I just duplicate by going into the debit side. Okay, so let's have now $2 debit. So now I'm going to have less money because it's no longer 10,000. Originally it was a 10,000 minus 500, so it was a 9,500. And then when I change it by a few penny, there it is. So now I got filled for 2. Okay, so I'm sorry, I did not get completely free. I did not get completely free, but it's quite close to it. It's quite close to it. So I'm taking a snapshot of this. Taking a snapshot of this, and I'm gonna be now putting this inside here and just kind of maybe arranging these numbers to match. So originally on my 400 it was quoting me as a $5 and a 358. I'm gonna just alter that to 460 and 309, and I'm gonna retake that picture. So this edit, it's easy to do. So instead of the mid price, you just click the filled, and we sold 400 call for $4.60. By the way, I will post this at the same place that I was showing to you, where we usually do that, and then you can use that link later on to find out what is going on. Well, actually, that link is only for the S&P settlement, so that link it's almost irrelevant for what we are doing today. Irrelevant for what we're doing today. Okay, so now because I got the information that matches, I'm gonna take a picture of that and simply replace it with what we did here. So this was our planning stage. When we were planning, we're anticipating that we're gonna get the 156. Delete, put the reality. We got in for 151. So take a look. I mean, we were almost like to the penny. We were almost to the penny. 151, right? And now again, like if you're going to be looking at your maximum loss, right? So what's your maximum loss? Oh, let me do the math. Let me pull up the calculator. Let me. Uh, do you really want to complicate? Or you can just click here and know exactly what it is. So your maximum loss would be 349, right? So you need to have on the line $349 in order to receive this buck 51, right? But that's not why we did this. We did this $1.51 credit in order, and I think I spell it out right here, to finance my bear put. So in this case, I mean, this is miraculous, like that I just have a one out of the money bear call spread pay for my bear put. This is a beauty, honestly. I mean, I'm gonna make sure that I post this so you guys kind of follow this and not lose me. Um, okay, what do we get filled on the top side? On the top side, meaning on this bear put spread, we got filled, and I'm just reading here from a second screen. On my 370, I received a credit of the $6.59. On my 375, I have received the credit of the $8.12. When I click OK, this thing, okay, so there it is. There's the difference of the 2 cents. And what do I mean the difference of the 2 cents? Well, I mean the difference of the 2 cents is that my 151, right? My 151, where did I put it? Oh, I'm sorry. My 151, right, is not paying for this, and this is inaccurate information. This was information 153. So when you're looking at this, that's why it's a debit of the 2 cents, right? So what is it over here? So it's a 153, and when we subtract the 153, this goes to 47, 347. Okay, so when you do this whole math, and again, one of the ways how you can do this, you just single right click here, create a duplicate order, and then don't send it in, but just take a snapshot. And what I mean by the snapshot? Well, what I mean by the snapshot is this. And now you even know exactly how much I'm paying for commission. And you see, the Thinkorswim does not even have a name for this trade. They call it custom. They call it a custom trade. Okay, I'm going to get rid of this one because it's inaccurate. Okay, so my break-even point is a 374.98, but I really don't want it to go to 374.98. Where do I want this trade to go? I want this trade to go, and I'm done with Thinkorswim, so I'm going to just exit out here. So I'm going to just delete this and exit out because, I mean, I need to answer a few questions before we end here. But I want this to go to 370. So if this thing is coming down to 374.98, I'm just about ready to start earning money on this. But what the beautiful thing is in this whole thing, and now I can get rid of the remove the study and remove only the option value map, and maybe just change this back to the weekly, so you would see better. Wow, look at this. This is a 1 week activity. We completely encompass the last 2 weeks of trading in this one, and the week is ending today, right? The week is ending today. Yeah, from here to here, we completely encompass that whole thing of the 2 weeks of trading. Now, of course, the argument is still there. Oh, but we are still up because let me change this to the green, because as long as we are creating the higher lows, we are in an uptrend. But if I switch this to the daily, most likely when we go over here, we have a multiple levels. Wow, we have a multiple levels when there's going to be resistance, there's going to be buying. So we're just picking up the nearest one, 3,700. So a recap of everything that we did today. We started the session by looking at the current environment. We concluded it was negative. We reviewed the previous trade, which was already published in tradingwithunfilledorders.com/Josip under the first entry here of the whatever the day was. I think maybe September 6th. I'm going to post the notes in as soon as we are done here. I've provided you SIBO so you can have that particular information for the rest. And then we start building the new trade. And the new trade was built in such a way that we broke it down to 3 steps. First was the location. And to use a location, what do? We looked at the chart. And we obviously saw that above this red unfilled orders, the price was 397. So we said, okay, let's round it up to 400. So we decided we're going to build a $400 bear call at that level. So $400 bear call on that level. And then we looked at the target, and the target was this 369, but we rounded up. We actually rounded up to 370. I should do that in the blue. Yeah. And then when we finished that, we actually proceeded to execute this trade in a think or swim. And when we executed the trade, we couldn't completely get it for free because we still had to pay a little bit. But what we end up paying, it's only about 2 cents. Honestly, if we had a little bit more time and we just left at the original order at the 0, we would get filled. Now I know Mark, he actually got filled. Oh, Mark is better than me. Look at the chat box. He's saying he got filled on a 1 on the puts for 155, and then he got filled on the calls for 154. So he's off only by a penny. But this is all like a plus minus, so I don't think you need to be sweating all this. So now it's the top of the hour. I like to get the feedback. How do you like the strategy? I would highly encourage you place this in a paper. Again, remember the steps, how we did this. It took us almost like an hour to do this. We were wrong in some of our assumptions. One of the assumptions that we were wrong was the size. But due to the fact that, as you can see, I looked at implied volatility and I was expecting the calls to be less rich in a premium. They turn out to be more rich in a premium, which was good enough for us with the one spread to end up paying for the other spread. And also another thing is that it makes a big difference. If this was an equal distance, if like let me just emphasize, probably the 2 most important numbers that I have here is that we are 17 points away from the top and only 13 from the bottom. Because when you subtract 13 from 383, you get the strike price that we are hitting, which is a 370 to the downside, right? and if this was equal distance, then the size would need to be a little bit different. Then in that case, maybe we need a more bear call spread. So anyway, it's the top of the hour. I want to thank you for attending this. If you like, please put the like, and I will see you next time when I'm teaching. And one more thing that I want to say: please, please, please make sure that you're aware of it, that uh, the Fed is doing this announcement on Wednesday. This trade, soon as it hits that level, you should be considering taking the profits and running. Don't hold this all the way till October. If you are profitable on a zero investment or a $2 investment in amount of, let's say, $150 or something like that, don't let the trade dominate you. Take money and run, because when you're trading, you must preserve your emotional capital, because in the long run, the emotional capital is more important than replenishing the capital after a losing trade. So when you're restarting after the row of the losers, the baggage comes with you. And then the greed kicks in and you say, well, I want to have that whole $300 on it or $350 on it. And then all of a sudden we come to this level and turn around and go up. So preserve your emotional capital. When this hits the 370, take money and run. Shut down the whole trade. Just because you have it till October, it doesn't mean that we're not going to turn around and start going up, going into the November election or something like that. And then you have a Santa Claus rally, and then everybody loses money because everybody's expecting the market is going to go down, but it goes up. So when this hits a 370, take money and run. Would I do this on SPX? You know what? Let me look into that. I didn't plan to do it on SPX right now. I planned to do it on SPY. On SPX, it would be risking way more money. But that's a good question. Too bad that I read this question at the at the end of the hour. So thank you once again, and stay hedged. Bye.